Introducing a new era for discerning Australian investors. Brought to you by Ausbiz and backed by deep market insight, professional analysis and a proven track record. Our focus is simple: to connect you with exclusive and compelling investment opportunities. Discover what's next at ausbizcapital.com.au. This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. Let's check what happened overnight. Global stocks rising along with the US dollar as trade talks between the United States and China continue, giving investors some reason to believe tensions between the world's two largest economies may be easing. US Commerce Secretary Howard Lutnick saying discussions between the two sides in London are going well and are now likely to run into Wednesday for a third day of talks. Now, on Wall Street, the major indices rose with the S&P 500 and NASDAQ adding more than 0.5%. Shares of the Mag 7 were mixed. Tesla shares surged while Microsoft slipped. And Alphabet climbed on reports that OpenAI plans to add its Google Cloud service to meet its growing needs for computing capacity. Insmed shares jumped around 29% after the drug maker said its experimental drugs significantly reduced blood pressure and improved exercise capacity in patients in a mid-stage study. JM Schmucker shares tumbled after the peanut butter maker forecast annual profit below estimates. And Snap was down marginally after the social media platform said it would launch smart glasses for consumers next year as it competes with Meta in the wearable technology market. Well, trade talks between the US and China in London are expected to enter a third day. That's according to US negotiators. The Trump administration has indicated that it could lift recently imposed export controls on goods such as semiconductors if China speeds up the delivery of rare earths and magnets that are crucial to its economy. Well, amid that uncertainty over trade, the World Bank has slashed its global growth forecast for this year to 2.3%, saying that higher tariffs pose a significant headwind for nearly all economies. While stopping short of forecasting a recession, it said economic growth would be the lowest since 2008. And by 2027, global GDP growth expected to average just 2.5%, the slowest pace of any decade since the 1960s. US forecast has been slashed to 1.4%, while last week the OECD lowered Australia's expected growth from 1.9 to 1.8%. Well, US Treasury yields little changed as markets await news from those trade talks. The US 2-year yield at 4.01% and the 10-year at 4.48%. And this week's Treasury auctions of 10 and 30-year notes expected to reveal if appetite for US sovereign debt is weakening among foreign investors who are wary of a worsening US deficit. And the US dollar has advanced on optimism over a trade deal between the US and China. The Aussie has risen to 65.3 US cents, and Bitcoin is trading at around 110,000 US dollars. Oil prices have held near a 7-week high, with the US-China trade deal forecast to boost prices by supporting global economic growth and increasing oil demand. Brent crude futures at $66 a barrel. Copper's down marginally. Iron ore fallen around 1% to $96 a tonne, and gold little change at $3,322 an ounce. So let's get across what's moving US markets at the moment. Howard Silverblatt joining us from S&P Dow Jones Indices. Howard, welcome back. Good to see you again. So I see from your note you're saying markets, investors, they just want to push this higher and higher. And of course, we've wiped out those losses from April. It's been a remarkable comeback. What do you see as driving that optimism at the moment?
Yeah, is optimism in spite of everything that you went through, all the potentials and the downfalls there, but the market obviously wants to go up. It's looking past the 2025 situation, which is not just the short-term tariffs, okay, which have 30 and 60 days left on them, China is in August. The 10% plus is in July. But they're looking to 2026, and they're building in certain assumptions, okay, which is more of a consensus. And that runs around a 10% base tariff across the board, additional for China and some regionals, but 10% to what they want. Also, that interest rates won't go up that much. Employment will stay stable. Even if we pull back a little, it'll stay well under 5%. We're at 4.2, which is a very good number. And that there'll be some kind of adjustment for farm workers because of the immigration problem. There's a difficulty in the U.S. with getting the harvest out, and the summer is starting here already. So that's a difficulty. But investors are looking past that. They realize there's pain. You could start to test underneath the levels, but we are up 21% from that April 8th low. 21% in a little over 2 months. It's amazing. I should add, though, close to 60% of that number is due to the Magnificent Seven. Year to date, they're still about flat. But since that time period, they have moved up a lot more. And they account, again, for 60% of that gain. So the market is basically going up. We're looking also for a tax package, 2 components there. It passed the House, now it's in the Senate. And for you to get an extension of the Trump 1.0 tax breaks, which is about 3.9 trillion, and to add another trillion into corporate and individual breaks. That includes full depreciation and capital expenditures, which companies will start to spend a lot more. So there's a lot of optimism built in between now and after the end of the year at this point. That said, there's still a lot of negatives in there that could pull it down, and if it goes through the wrong way, we'll get a pullback. One would be that inflation does start to come up. Tomorrow we have the CPI that expected to show a big increase, maybe up to 2.5% with energy helping a little. But if we see higher numbers, that will be hurt. If Congress does not pass the tax extensions by the July 4th, because they go in recess in August, so they need time to pass it. If they do not pass it, taxes go up next year, and you come back and you have a fiscal problem and a liquidity problem, especially with the debt that the government can't pay its bills. So that optimism can quickly change if Congress doesn't pass or we don't get tariff items. But for the moment, money is going in. That new high is 1.7% away. 1 day's trade, and we can hit it. And as you said, the news out of London for the China discussions is going well, but we don't expect that to be resolved soon, and you need China to make the resolution on there. They don't have a deadline there till August 9th, and it can always be extended.
Yeah, because interesting, we haven't heard from the Chinese. The Americans saying it's going well. No comment essentially from the Chinese to date. But I mean, we do have those 2 key events in the next 24 hours, obviously news out of those trade talks, but as you also mentioned, inflation read. But do you think perhaps investors' markets likely to look through any surprises in inflation as being, dare I say it, transitory because of the effect of those tariffs?
Not sure we want to use that word and get caught in the same situation, but yes, 2.6, 2.7 will go in. It would depend what pushes it up. Obviously, we've had trade imbalances. You had the buildup, and then on the deficit budget going down the other way on there. But the CPI and PPI is the next day, by the way. That's the producer price index, so that's how much you actually do. CPI is looking in rear view window, how much you actually increase. Market will definitely, unless you've got some blowout number, again, 2.5 is what we're looking for. 2.8, 2.9 could get some difficulties there. But market will look past that. We've got the Fed next week. Nothing's supposed to happen. Depending upon the CPI and PPI, we would expect the verbiage at the conference call next week by Powell to change, but we are not expecting a rate cut until September, and then another one potentially in December. By the way, Trump is putting a little bit of pressure on Powell. He wants that cut. We don't think Powell is going to move on it, but he did talk about his new appointment to the FOMC, which he will appoint for next year, maybe coming sooner. So he is definitely looking to push Powell into a cut, but the street is not expecting it at all. It's almost a zero probability if you look at the futures.
Yeah, clearly Jerome Powell standing firm there despite Donald Trump telling him he should be cutting. Just stock-wise now, Howard, you mentioned obviously those mega-cap tech stocks leading from the front again. But I guess a couple of stocks in focus, obviously Tesla, given that dramatic fallout between Elon Musk and Donald Trump. Also Apple, you're saying perhaps disappointing.
Yeah, Tesla's made back a bit of their gain. They did well yesterday and the day before. Also tomorrow, which is going to be a test for their automated car service, their taxis are going to go. That will be in Austin, Texas. So that'll be a major test. It's going to be small. They're only looking to do 10 to 20 cars out, but it has to go perfect because we are pricing Tesla, as an auto cab. For the AI and for the maneuverability of it. So that is very important tomorrow. Apple had its meeting, WWDC, and it didn't. The developers were not impressed. In fact, I don't think anyone on the street was impressed. They haven't put anything into their products yet. They got some nice improvements there, but nothing that's going to make me go out and buy a new Apple iPhone at this point. And everyone else is catching up with what they have. Apple has a habit of being late to some of the new tech, but when they go in, they usually go in very strong. And that's what's holding the stock up right now. Otherwise, there's been a few cuts on it as far as the holding and the price target, but it's holding near the 200 level at this point. But everyone was disappointed in that. It's not going to increase sales no matter where they're made in China, India, or the US.
Howard, always good to catch up with what you're seeing on Wall Street. Thanks so much for joining us at S&P Dow Jones Indices.
Thank you.
Let's return home then as we prepare to get going on this Wednesday, looking for another positive start there. So, extending the record on the local ASX 200 index there, perhaps eclipsing 8,600 levels. So, pretty much reflecting what we're seeing on Wall Street at the moment. Quite a remarkable recovery given those lows off the back of the introduction of those Trump tariffs. In April, it has been a dramatic recovery. All right, stay with us because we're going to get right across that open in just a couple of minutes.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.